Hi there, very good morning to all our viewers and welcome to Opening Bell. I'm Stacy Pereira and I'm here to take you through all the news and cues that you need to be looking forward to and that could impact your trading day. So let's get straight to what we're seeing from what we're getting from overseas as well as what the trade setup for us really looks like. Well, if you see Indian equity markets, they are consolidating, we could say, ahead of the F&O expiry. Well, the GIFT Nifty too is indicating maybe a muted to a flat start, but maybe still with a positive bias. Whereas if you look at stocks on Wall Street, those were the ones that actually gained by the end of trade last night. And remember, we are entering into that Thanksgiving holiday, so US markets are going to be closed on Thursday for Thanksgiving, but we did see the stocks really gaining as well as bond yields easing, and that's what really helped the markets there. Well, if you look at Asian markets too, those ones were trading pretty mixed this morning. We had the Nikkei 225 and the Kospi both trading in the positive or fairly in the green, whereas the other stocks like that in Australia were seen in the red. If you look at commodities, oil prices were the ones that slid by about 4% as the OPEC Plus was supposed to meet on November 26th, but they've gone ahead and decided to delay that meeting by another 4 days. Well, the reason for it is yet unknown, but we did see oil taking quite a tumble overnight, falling more than $3 per barrel. And if you look at the trade setup and what the fund flows here in India were like, where we did have foreign institutional investors or FIIs who've gone ahead and sold shares worth 306.56 crore rupees on November 22nd, as well as DIIs who've gone ahead then and bought shares worth of 721 odd crore rupees. So that is pretty much the trade setup that we have here. But let's also get a picture from the F&O front, where the put-call ratio, as we call it, what we're seeing there, the Nifty PCR indicating the mood of the equity market really, and that in fact has increased further to 1.07 on November 22nd versus the 1.02 that we saw in the previous session. And remember, 1 plus PCR really indicates that traders are actually buying more put than calls, which is generally an indicator of a bearish sentiment. So we are in that kind of market, but let's also put the highlight on which stocks are making it in the F&O ban list. And well, NSE has retained BHEL, Hindustan Copper, India Bulls Housing, India Cements, Manappuram Finance, MCX India, as well as NMDC, RBL and Z Entertainment. All of these stocks will continue to remain in the F&O ban list for November 23rd. However, who've been removed from the ban list include Chambal Fertilizers and Chemicals as well as Delta Corp. So pretty good news coming in there for these two stocks because they are out of the F&O ban list for the moment. Let's now get going and discuss a couple of stocks and what strategies one is supposed to be applying in such a market. And joining me to do that is Chandan Taparia from Motilal Oswal. Good morning, Chandan, and thank you for speaking with us here at Money Control. Let's get first a sense of what we have, what we're seeing in the markets, what the charts are really telling us. Well, Nifty is tested that support zone of 90,700, 90,680 also and witnessing that sharp recovery from there. Now we're hoping to see that 19,900 levels back again. But is there enough momentum and positive momentum for that matter to take us forward there?
Good morning. Thanks for having me. So already we have seen good run up in last 3-4 weeks where Nifty rallied by around 1,000 points all the way from 18,838 to 19,875. Looking at last 4-5 days, we are finding some hurdle at 19,850, 19,875. But at the same time, every decline is being bought. Beyond the last trading session, we fell to 19,700, but again recovered and closed on the positive note. So declines are being bought because of the lower VIX. Momentum is missing, but yes, declines are being bought. So because of that, we'll continue to be with major trend. We suggest to be with the bullish side with support of 19,660, and I believe this rally can drive till 20,000 and even new lifetime high of 20,222. So overall positive bias. For intraday point of view, you can focus on 19,888. But for 2 to 4 days point of view, we also need to focus at 20,000 to 20,222. That means new high is knocking the market as per the internal setup.
Chandan, let's also shift focus towards the banking index because that has been pretty much the underperformer for the past few sessions. We can say that the bank Nifty trying to hold on to those 43,650 zone, but there is weakness there and we could see that coming down further. In fact, what has really not worked for them, and they've been underperformers since July, and now you have additionally what the RBI has gone ahead and done with the directive to increase that risk weight on personal loan, credit cards, etc., and which has put further pressure on these banking stocks. So how should one be looking at the banking index as well as stocks? Should one be waiting it out when it comes to banking names?
So we have given clear thought and bullish mandate to the Nifty, but if you ask me, Bank Nifty, frankly speaking, here the bias is mixed. Because we have noticed that every small bounce is being sold. In fact, from last 4-5 days, it has started to form the lower top, lower bottom. So we got stuck in a range between 43,000 to 44,000. We have multiple barrier at 44, 444. If that level is surpassed, then only Bank Nifty can support the market in a bigger way. But at the same time, we have barrier at 44,000, 43,650. So multiple barriers are created in the Bank Nifty, and that is the reason that some underperformance is visible. So I believe here we need to be mixed, be with very selective. But yes, it has potential to even retest to the support of 43,333 or 43,000. Now looking at the stocks, we are witnessing some sort of negative bias and counter like IndusInd Bank, Kotak Bank. So I think be with the mixed cues, focus more on the Nifty, in selective other heavyweights, and selective IT counter will aid the flavor in the market.
Right. Chandan, let me also ask you, that common debate or what we're normally asked is where should one be parking their money and what strategy should one apply in this kind of a market where you're seeing consolidation as well as volatility in equal measures. So should one be looking at large caps or mid cap and small caps? One should be wary of them right now because of the kind of volatility. What would you choose when you say large cap versus mid cap versus small cap?
Thanks for a brilliant question. And I like the way you asked that we are witnessing consolidation with volatility, and that is exactly happening in the market. And what we have to focus that over the next couple of weeks, the entire setup and focus will be on. First, you need to remember that Monday we have Thanksgiving. So US market will start. And then the focus will be on the assembly state elections. And then theme will be on general elections. So I think for next 1 to 2 months, the entire focus on the elections part. And election could aid volatility in the market that has the nature. So be ready for some sort of volatility. But as of now, the VIX is below 12. And that is the reason that we are not much worried about the market. VIX is lower, PCR is holding, and market is shifting its base to higher zone. And that is the reason that we are not much worried from all these triggers. But yes, caution has to be there. And that is the reason you need to park your money either on the selective heavyweights or on the counter, which are slightly outperforming. So if you ask me few names, I'll look at the selective auto name, whether you talk about Hero Moto,
right,
TVS Motors.
In fact, Chandan, wait, I'm going to ask you to hold on to that because we are hearing the opening bell there and markets there opening in the positive, we could say. Well, it is getting a pretty good handover, one would say, and which is why you're seeing markets even yesterday in the last hour of trade is when we saw that, complete buying and pretty much that continuing, one would say. The Nifty, they're up just about 0.1%, but still opening in the green and holding on to that 19,800 levels because yesterday what we saw was that decline when that initial opening up happened. But today we are comfortably in the green. Let's look at the other indices for that matter as well. The Nifty Bank, like we were talking about, that one also in the positive today, above that 43,500 levels or so as well. So that being another positive for the Bank Nifty. Mid-cap indices, now there we are seeing quite a divergent kind of, the mid-caps being on the high for pretty much 2-3 days on a trot, well as the small caps seeing some bit of pressure. But today here, the small caps also opening up with about 0.3% higher. So even the Nifty IT index there on your screens up and about in trade. Yesterday, in fact, we saw the IT ones taking it on the chin. Today, a different picture. Whereas Nifty Pharma here in the red opening up pretty much flat. But Pharma has been quite an interesting counter of late. Big names coming in there. In fact, we saw Cipla and even Dr. Reddy's both hitting new record highs just yesterday. So the pharma, it's quite interesting to see a couple of stocks in the pharma segment. FMCG also quite in the positive here this morning. Consumer names have been quite positive. We are seeing good results coming in there as well. Metal too today in the positive, and we are seeing some good reactions come in even from brokerages on how China is really reacting to how metal prices are moving ahead. But today the metal counter up and about. Auto too is seeing a positive day today. You're seeing a good, specific market action, stock action as well that is helping this counter, be it from TVS or Maruti. All of them have been in the news of late, and which is why this counter as well pretty positive. Realty for a change is seeing almost 0.5% higher this morning. So that one also comfortably in the green, as you can see. So pretty much we're seeing a mixed range of trade sectorally, but more of them in the green than in the red. Let's look at the top gainers and losers in trade. Well, top gainers on your screen: Bajaj Auto, Tata Motors, M&M. So all the auto names, and which is why you're seeing that index pretty high up there. Other names are Adani Enterprise, Adani Ports, Asian Paints. Now, Adani stocks have been seeing quite some bit of swings, one could say. Yesterday, they were down and about more than 2% cuts, whereas today it's making it to the positive list. Let's also look at the other names: UPL, Power Grid, Hero MotoCorp. They're in the positives, whereas let's look at the losers now. Cipla, Dr. Reddy's, like I was just talking about, after hitting new highs, they are seeing some bit of pressure. So those in the losers list today: Ultratech Cement, ONGC, as well as Bharti Airtel, Hindalco, TCS and Kotak Mahindra in your top losers list for today. So those are pretty much the stocks that are going to see some bit of action as well. But let's also shift focus towards a couple of other names that you're going to see a buzz in trade today. One of them being Interglobe Aviation, the parent company that runs Indigo. Now, this will be in action because it has received an order of demand of about 1,666 crores from the Commissioner of Income Tax Appeals. Now, remember, the company has received two orders, one with a demand of about 739.68 crores and the other of 927, I beg your pardon, crores from the Commissioner of Income Tax Appeals. Now, and this, remember, is for the assessment year of 2016 and 17 as well as 17-18. But this company has gone ahead and saying that they are going to be contesting the same. That means they're not going to be paying this. They are going to challenge it in, or rather seek legal remedy. And they also, this is not the first time that they have been fined such a way. This is the second time, in fact, where the Commissioner of Income Tax Appeals has confirmed and gone ahead and said that the last time this happened, the order was passed in 2015. So it remains to be seen whether they'll go and really contest this order. The other stock that we're going to see in action is Honasa Consumers. Now, this after their Q2 results have come in, where they've seen that the beauty and personal brand, pretty much the owner of Mama Earth and the newly listed one on the streets, has recorded a massive 94% year-on-year growth in its consolidated net profits, which have come in at 29 crore rupees. Whereas if you look at the healthy top line as well as operating performance, the revenues from operations have actually grown by 21%, coming in at 496 crore rupees. EBITDA too has increased by 53%. So overall, the numbers looking very positive for them. Distribution is, increased by about 47% as well. And even the brokerages are giving it quite a good call for it. In fact, Jefferies has gone ahead and given a buy call and in fact hold call as well for this counter. So we're going to see some action. In fact, let me bring in Chandan once again and ask him how should one be looking at Honasa's. The IPO when it came out had quite a bit of traction, of course, but now the stock also performing, at least the numbers, the P&L statement showing that, almost doubling of profits. So, Chandan, how should one be looking at Honasa Consumers? Is it really taking to how other new age companies that are, coming to the street? Is this one of their strategies, and which is why you're seeing a good P&L statement this time around?
Yeah, so we have less price history, but yes, the way sector is doing well, and other stocks from the same kind of category is doing well, I think some up move will be there. Upgrade in the counter could also add positive momentum. As of now, the setup is indicating on the upside, so one can look at the positive move. Overall, I believe that some sort of 390 to 400 zone could be the potential target for the counter.
Chandan, before I let you go, let's also talk a little bit about auto stocks because we're seeing them, all of those main counters are in the positive. In fact, there's also news coming in from TVS Motors, which has now entered the Vietnam market, has launched the two-wheelers there. And just last week, they also entered the European market. So there's a lot of export that is expected from TVS Motors, and which is why you're seeing that counter also reacting like that. But let's look at the overall two-wheeler space, because that one has been, we didn't see that rural recovery that was anticipated, but we just had the festive sales. So could we see a turnaround coming in there, at least for the two-wheeler space among autos?
We are quite positive on the Nifty auto segment, and I believe most of the auto stocks are in top gear. Whether you talk about TVS Motor, Bajaj Auto, and Hero Motor, and TVS Motor is one of the strongest and preferred counter which we are recommending from last couple of months. The stock has seen the huge alpha generations, one of the strongest counter which is technically making higher top, higher bottom. So I believe this move could extend with support near 17.15. One can expect the rally towards 18.20 kind of level. Apart from TVS Motor, positive view is there on Bajaj Auto and Hero Moto. Bajaj Auto can go towards 6100 levels. Hero Moto can extend the rally towards 3550 zone. So we have positive view on all these counters, including TVS Motor, Hero Moto, and Bajaj Auto.
Chandan, before I let you go quickly, what are you recommending this morning for our viewers, and what do you have on your radar?
Yes, one stock already we talked about auto segment. So I can already you ask about TVS Motor. I added about Bajaj Auto, Hero Moto can also you can consider with support of 3360. It can head towards 3600 zone. We are positive on the selective counter in power or pharma. Oro Pharma will be one name where we have bullish view. Stock has really done well in last few days. Today slightly down, so one can accumulate with support of 1020 for target of 1090 kind of level. So Oro Pharma and most of the auto stocks will be on focus. You can consider trading ideas on TVS Motor, Hero Moto, and Bajaj Auto, all three as well for the day.
Right, quite interesting. So most of those auto counters are also on Chandan's list, as well as Aurobindo Pharma from the pharma space. Well, thanks so much, Chandan, for giving us your time and speaking with us this morning and giving us these recommendations as well. Well, let's now turn focus to the fundamental picture. We have quite a lot happening if you look at externalities and how that really impacts the economy back home. And one of those factors definitely being the Israel-Hamas war. There is a ceasefire for at least 4 days that has come into place. We are going to see that take action, in fact, today. But all of that is having its repercussions. We just saw, because of one of the reasons, we're also seeing the OPEC delaying its meeting, and which is why oil prices took a tumble overnight, and we're seeing them trade much lower as well. Of course, for an importing country like India, it is quite a positive. But let's discuss all of that and its implications on the market and the economy as well. And joining me to do that is Hemang Jani. He's an independent market expert. Good morning, Hemant, and thanks so much for speaking with us. Let's talk about crude first, because that is something that really impacts us in different ways when it comes to inflation, when it comes to our CAD numbers. So let's look at how this overnight that we saw almost a $3 per barrel drop in crude oil prices, and how that is going to translate for us here in India.
Good morning. Thanks for having me. I think it's been good movement in the crude over the past, let's say, 2 or 3 weeks. In between, we had a scenario where the crude had almost touched about $100, and people were worried about how things are going to shape up, particularly when the interest rates globally and in India are inching higher. So I think a big relief for the equity markets, for overall interest rates, etc. And I think given the way the inventories are getting built up in US and in certain other developments in Mexico, surely it would be great news for our markets, which are anyway doing well, but this provide additional trigger for the broader market for certain sectors like maybe paints, oil marketing companies, tires, and so on and so forth.
So what really could then be tailwinds that will actually take the markets? Because right now we are seeing we kind of have lost any kind of direction. So what's going to be that trigger to take us forward? The US, if you have to look at globally, the US markets are pretty much in a range as well, and they're getting into a holiday mode right now. So when are we going to see that Santa rally that is expected by the time we have December around the corner, and what is going to take Indian markets specifically forward?
Clearly, if you look at the triggers, the biggest trigger has been the earnings growth. This quarter, whether you look at the Nifty companies, you look at the broader universe, numbers have been good. For the broader market, the key takeaway has been the margin expansion. So that surely is something that we think would be a factor that people would want to watch out for. Other thing is that if you see some stability in the global markets, if the interest rates pause and eventual cut is something that the market has sensed, and they will start factoring that in over the next, let's say, few weeks and months. I think that provides a great trigger for the inflows by the FPIs, which have been kind of not been that great. So I think a combination of earnings and a slightly better outlook on the flows are the two key triggers. Apart from that, of course, you have state elections and so on and so forth.
Right. And are these elections too much of a worry? We have Rajasthan, which is pretty much a big state, which will get into elections by the end of this week. And the results, all of them coming up on 3rd of December. So could that, and statements being made outrightly, the finance minister come out and say that, individual states should be looking at how they want to be pitching their manifestos, and whether freebies should be something that everyone should look at individually at the state, whether the states has those budget. But that definitely also helps a couple of stocks when these freebies are given out there. So how do you see that really acting, and could it change the fiscal picture for the country as a whole?
See, in a country like India, you cannot ignore the hype around the elections, whether they are state elections or the general elections, which are scheduled next year. I think, given by the history, and the successes that some of the political parties have seen, particularly in Karnataka, there is going to be an emphasis on subsidies. But I think the broader, case is that people are not worried too much about it. It's being seen as more of an election strategy, and one is really not looking at beyond it. So I think depending upon how things shape up, market would take a note of it. But state elections per se would not be too big of it. It would just be maybe for a couple of days, 3 days, depending upon what the outcome is.
Right. So we have elections to keep an eye out on, but let's look at a couple of sectors that get impacted or how those are going to react. What are the sectors that one should be looking at this point? We are seeing pretty a wait and watch kind of mode when it comes to the banking sector and those stocks. But pharma, on the other hand, is seeing a really good run. Auto, for that matter, also seeing quite a good pickup after the festive season. And also, which are these sectors that can actually be the ones pushing the market and, in fact, getting that Nifty to that 20,000 levels once again?
I think within the Nifty, IT has seen a very smart comeback, and I do think that there is enough room on the way up, given the way things are shaping up in the US markets. And the way particularly some of the companies have announced numbers and the deal wins part. Secondly, I think BFSI, banking financial services, seen a bit of an underperformance, but I think at some point, as you see stability in the interest rates and the regulator is not pressing that button too hard, people would want to come into it, because I don't think there is anything materially negative for the banks per se. Yes, for NBFCs, consumer loans, maybe there is a period of little bit of slowdown, but pure banks, I don't see much of an issue. So that would be one sector to reckon. Apart from that, you will see pure commodities, be it sugar, maybe some of the textile companies. I think the data points globally continue to look good in terms of pricing for textile. The volume growth picture continues to look good. Some of the companies have been included in MSCI, so Gokaldas Export, Wellspun India, Balrampur Chini. These are the names that I would really go with.
Right, so quite a diverse view you have there, and quite a few names, right from the large cap to mid cap. But that is also one question that I want to ask you before you go. In a volatile environment like this, where is one supposed to be looking at? What are the stocks that one should prefer? Should it be the blue chip, large caps, or should it be a mid cap or small cap, which are seeing some bit of volatility at this point?
Well, advice when you structure your house, what you look at is that the strength and the durability is very important. And in stock market, that provided by the blue chips and the large caps. So names like Titan, Ultratech, Tata Motors, Maruti, HDFC Bank, you should really have 60-70% of those in the portfolio. And then depending upon the momentum and excitement, you can have a small exposure, 5%, 7%, maybe real estate, housing theme, tiles, plywood, all of that. But I definitely think that a large part of the portfolio should be around the very solid blue chip names.
Right. So you are recommending the bigger blue chip names that will actually help even take this market forward, and one that is perhaps a more cautious way to be trading in this market as well. Well, thanks so much, Hemang Jani, there giving us his ideas and perspective of how one should be trading in this market. But with that, it's a wrap and goodbye from the entire team that's putting this piece together. Thanks so much for watching. But please do post your feedback for us in the comment section below, and follow us on the link at the bottom of your screen. And for all the rest of the updates, stay tuned to Money Control as well as the Money Control app.